Welcome to Aviator DB News Briefing. Today is Thursday, April 23rd, 2026. Here are today's top stories. United Airlines cuts 2026 profit outlook amid rising fuel costs. Trump administration considers $500 million rescue package for Spirit Airlines. Senate panel unanimously advances aviation mental health bill. Now for the details. United Airlines Holdings Inc. has revised its 2026 full-year adjusted earnings per share forecast downward to $7 to $11, down from the previous range of $12 to $14. The carrier attributes the cut primarily to escalating fuel costs driven by the ongoing war in the Middle East, according to the airline's first quarter 2026 earnings report released this week. For the second quarter, United projects earnings of $1 to $2 per share, assuming an all-in fuel price of approximately $4.3 per gallon. Management anticipates recapturing 40% to 50% of higher fuel costs through pricing in the initial months, increasing to between 85% and 100% by the fourth quarter. This strategy aims to mitigate financial strain amid volatile energy markets affecting the broader industry. Despite the revision, the airline notes that strong underlying travel demand persists throughout its network. Global carriers continue to face pressure from conflict-related fuel spikes while adjusting strategies to offset costs. United maintains its focus on stabilizing profitability as market conditions evolve. Trump administration considers $500 million rescue package for Spirit Airlines federal financing proposal. The Trump administration is nearing a $500 million rescue package for Spirit Airlines that would provide federal financing in exchange for potential government ownership of up to 90% of the carrier once it emerges from bankruptcy. President Trump stated on Tuesday via CNBC's Squawk Box that he was open to federal assistance for Spirit Airlines, citing the carrier's 14,000 jobs at stake. Regarding the potential acquisition, Trump said, "Spirit's in trouble, and I'd love somebody to buy Spirit." Deal structure and administration response. The proposed agreement would offer up to $500 million in financing in exchange for warrants to purchase up to 90% of the new entity after the airline restructures. However, the talks remain fluid and an agreement has not yet been finalized. Transportation Secretary Sean Duffy confirmed that Trump had directed the department to review possible support options, with Duffy stating he would have conversations with the president and meet with budget carriers. U.S. Commerce Secretary Howard Lutnick is leading the rescue effort for the administration. Financial context and challenges. Spirit Airlines approached the Trump administration seeking an emergency bailout to avoid liquidation due to skyrocketing fuel prices. Some creditors have questioned the airline's viability and are concerned it cannot make upcoming multi-million-dollar debt payments. The airline's financial distress intensified after fuel prices spiked in late February due to the conflict in Iran, occurring after Spirit had reached a creditor agreement to eliminate billions in debt. Market response and status. Spirit Airlines' stock jumped as much as 57% on the prospect of the government lifeline. The carrier was expected to exit its second bankruptcy since 2024 by summer, but the fuel crisis has jeopardized this timeline. There is internal disagreement within the Trump administration about whether to proceed with the rescue package, and it remains unclear what stake the U.S. government might ultimately obtain. Precedent. The administration has previously engaged in similar equity stakes. The U.S. government took a roughly 10% stake in Intel last year, and Trump has floated making comparable transactions with other companies. The U.S. Senate Committee on Commerce, Science, and Transportation unanimously advanced the Mental Health in Aviation Act of 2025, S. 3257, on April 14th, sending the bipartisan legislation to the full Senate for consideration. Introduced by Sense's John Hoeven and Tammy Duckworth, the bill allocates $15 million to direct the Federal Aviation Administration to update regulations regarding mental health disclosures for pilots and air traffic controllers. Key provisions include expanding approved medications and treatments, streamlining special issuance medical certifications, and reducing certification backlogs. The National Business Aviation Association welcomed the passage, noting that annual funding through fiscal year 2029 will train more aviation medical examiners, including mental wellness specialists. Senator Hoeven stated the act aims to address industry-wide stigma while promoting early intervention and overall aviation safety. A companion bill passed the House in September 2025, with supporters seeking full Senate floor consideration this session. The legislation builds on a 2024 FAA committee report that focused on pilot evaluations and peer support programs, including referrals to the 988 Suicide and Crisis Lifeline. The Airline Pilots Association commended the move for increasing access to mental health resources and enhancing aviation safety. That's all we have for today. You can get the latest aviation news at aviatordb.com.